Okay, so good evening once again to the Florist Professional Institute. This is our second section on the introduction to cost and management accounting. We've dealt with some of the critical issues and we will zoom straight into continuing the question. I think in the morning, during the morning section, we stopped at question number 50. We did half of the question. So we are going to continue with the half. It's 100 questions all in all. So we will be tackling with the other set. So you pay rapt attention to it. And then where there are questions, you should draw my attention to it. So before that, can I get somebody that will volunteer? Any person to volunteer when any comment is left on the page or a question is asked, the person will draw my attention to that. Also, I will need one person who will do the reading for us. Can I get any person? Can any person volunteer? Or I should select? Should I select anyone? Okay, no problem. So I will go straight into reading the question number 51. Question number 51. We have Bobo Tyler or Bobo Tyler. Can you hear me? Am I clear?
Yes, please.
Okay. So Bobo Tyler Limited normally purchases a total of 2,500 liters of diesel. 2,500 liters of diesel per month. It takes 2,500 naira to bring this diesel from the filling station to the company, and the purchase price is 200 naira per liter. Annual stock keeping and maintenance cost per naira of stock is 6 naira. What is economic other quantity to the nearest liter? So guys, what we'll have to do to help me is you will try and then mute your session so that if you have any question, you can unmute and then ask. So let's try and mute the session to prevent distraction. And let's follow rapt to it. Did we get a question rightly so that we can?
Because
Guys, guys, let's check our microphones. Hey, Emmanuel, check your microphone. Emmanuel. Oh. It's Emmanuel. Check your microphone. There is distraction feedback at the end. Okay, good. I just need someone to volunteer and be reading the question for us and we will be solving. So can I get any person who will do the reading? Okay, so it means I have to be reading my own question. No problem. So we said that Bobo Tyler Limited normally purchases a total of 2,500 liters of diesel per month. So monthly is 2,500. It takes 2,500 naira to bring the diesel from the filling station to the company, and the purchase price is 200 naira per liter. Annual stock keeping and maintenance cost per naira of stock is 6 naira. And you're asking what is the EOQ to the nearest liter. So we are talking about the economic order quantity. The economic order quantity. So I'll continue from this board. Okay. So we are talking about the economic order quantity, and this is mostly under inventory control. Under inventory control. So with the economic order quantity, we said it is the reorder quantity that reduces or minimizes both the holding cost and the ordering cost of inventory. So this is what we know. So anytime you are giving, you just have to know your formula. So we have the economic order quantity to be the root of 2AD times cost of ordering over the cost of holding inventory. This is what we, so where the AD here becomes the annual demand. Guys, are we following? The annual demand. So the demand is annual, yearly. Then we have the CO here representing the ordering cost or cost of ordering. Then we have our CH here becoming the holding cost or cost of holding. And this one is mostly per unit, the cost of holding. So once you have this, then we can bring out the parameters together. So we are told that Bobo Tyler Limited will mostly purchase or normally purchase what we call 2,500 liters per month. So the purchase or the total demand is given as 2,500 per month, but we want it for annual. The AD is annual demand, so we have to multiply it by 12. So you'll be looking at the nature of the question. So if the question tells you that the purchase price is per week, then you express it into annually, that's yearly. So this one, we have it. What will be the total of this? 25,000 times 12 is what? Guys, let's separate the calculation. And we are told that it takes, let me check the question. Okay, 30,000 naira. That's, oh, sorry, this is not currency. So this is the annual demand, so 30,000 liters. Then we are told that it mostly takes 2,500 to bring this diesel from the filling station to the company. So it means that the cost of ordering or the delivering cost is given as 2,500 naira. Okay. Then the cost of holding. So from the question, let me try and check. From the question says that, so it takes 2,500 to bring this station to the company, and the purchase price is 200 naira per liter. That's the purchase price. We are told that the annual stock keeping and maintenance cost, so this one is the cost of holding, is given as 6 naira per the material. So yet we are told, okay, so we are given the cost of holding is 6 naira. These are the parameters we need. So now we should calculate for the EOQ, the economic order quantity. I'll just put it straight into the question. So we have the annual demand as 30,000 liters times the cost of ordering 2,500 all over cost of holding is 6. Let's punch this into the calculator and see whether our answer is there. Sometimes in the question, they will give you the holding cost as a percentage of the purchase price. So if they told you that the holding cost is 10% of purchase price, that is when we will use the purchase price in computation of the holding cost. But here they gave us the holding cost straight away. That's what will be the answer. Is it 5,000 liters? Is it 5,000? Oh, let's try and be cooperative. Let me calculate my thing. Okay, so we have the root of, what? Okay, so I have 2 times 30,000. So 2 times 30,000. Okay, multiplying 2,500 all divided by 6. So that should give me 5,000. Okay. So I have the 5,000 liters, which will be A. Are we okay with the economic order quantity calculation?
Yes, please.
All right. Let's go to, now we are told that the following information is given for questions 52 and 53. I just want someone to help read the question so that we'll do the calculation. Can I get someone to read the question? Oh, guys, won't I get any volunteer? This evening, dear. All right, no problem. So in a factory of Yewuke Manufacturing Limited, the following details apply to a factory staff who takes 6 hours to complete a task under a scheme of payment by result. A scheme of payment by result. Standard time allowed for the job is 10 hours. The worker is on an hourly rate of 150 naira per hour. The material cost for the job is 1,600 naira, and the overheads are recovered at 200% of the total wages. So once you see a question like this, it is trying to bring us to job costing or cost computation or the costing method, then also factoring in the bonus scheme. So this morning we spoke about the bonus scheme that we have, the type of calculating for labor by time rates and by piece rates. And piece rate here is what we call as the by result. So that's what we are told. Now let's look at what the question is demanding us of. Using the housing bonus scheme, determine the factory cost of the job. This morning we spoke about labor accounting. So from here, let's see. We are given the time allowed. Time allowed for work to be done is 10 hours. So the time allowed, the standard time, which is the time allowed, is 10 hours. The time taken by the staff, or what we say, time spent, time taken or time spent by the staff is 6 hours. It means that they have been able to save. So the difference between is 4 hours. They have been able to save 4 hours. So the bonus scheme will be depending on this hours. Okay. So we are told now that the hourly rate, now the rate per hour is given as 150 naira per hour. Rate per hour is 150 naira. We have to calculate the factory cost of the job. And this is the process we would engage in calculating the factory cost. Okay. So let me use this dashboard. We are looking at the calculation of factory cost. If you have any question, you kindly draw my attention. I may not see the chart. So calculation of factory cost. Okay. Factory cost of the job is very, very simple. What do we have? We have to first state our element of cost. And here, our element of cost starts from the direct material cost. So direct material cost. From the question, we're told that the job cost, so the material cost of the job is, I think, 1,600. Okay, so we are told that the material cost of the job is 1,600 naira. Then we come to computation of the direct labor cost. Now, labor cost was not given to us, so we have to compute for labor cost. And then the labor cost here is going to be one, the basic pay, the basic wage. So they were allowed 10 hours. They were allowed 10 hours, but rather worked 6 hours. So we are going to calculate based on 6 hours. So the time taken is 6 hours times the rate. What do we get? 6 times 150 will give us what?
900.
Okay. So we have 900 here. Then we will calculate the bonus scheme. Then they gave us, they said the bonus scheme, we should use what? The house. We should use the house bonus scheme. House bonus scheme uses a time and half. That's house. Then we have another which is called house area. House area uses a time and third. Then we have the row one. I won't talk about row one because in the 53 to talk about row one. So the process I will use in calculating for the time and half is the same thing we use in calculating for this. Okay. So the bonus here, we are using the house bonus scheme. House bonus scheme deals with a time and half. So we are saying that the formula is given as the time saved times the one whole number 1/2. That's the time and half times the rate given in the question. So yet we are going to have that hours spent here. The hours spent saved here was 4 hours. 4 hours times the rate 150 times the time and half. Now, when you convert one whole number 1/2, you are going to get what? 3 on 2. So what will be this? Guys, compute it and let's see.
Yeah, it's true. It's true.
No, what will be the answer?
Okay.
Is it 900? Is it 900?
Yes, yes.
Okay. So when we add the labor cost, now the total labor cost, you are going to pay them the basic wage rate and then the bonus, so that the total hours now will be 10 hours as given in the question. Okay. So the labor cost per workings one is given as 1,800. Okay. We'll check whether there is a direct expense in the question. So from the question, there was not like direct expense. Okay, so it means that we are going to sum these two to become our prime cost. Our prime cost. So 1,006 plus 1,008 gives us what? Is it 3,000? I think it's 3,000.
I'll go.
It's what?
Yeah,
It's 3,000 what? Guys, let's check our
3,100.
microphone. 3,100. No, 1,008 plus 1,008. It's 3,400. So our prime cost will give us 3,400. Okay, this is what we have, but they say we should calculate for the total cost of the job. Now we are having overheads. So overheads here, in the question, we were told that overheads are recovered. Let me read the question so that I don't get confused. Overheads are recovered at 200% of the total wages. Okay, overhead are recovered 200% of total wages. So the overhead here So let's say we have our overhead is giving us 200% is actually 2. So 200% times the wage over there will become 900. Guys, when you estimate this, what do you get? I think it should be 1,008, right? Because 200% is 2 actually, times 900 will give me 1,008. When you add the total of this, what do you get? I think it should be 5,200. And this is the total cost of the job. Total cost of the job. Here we are paying, you see, said the total wage here we are going to pay the person is 900. Then we added the bonus scheme. So this is the total emolument. We are not going to do it on the total emolument, but on the wage we are paying, the normal salary we are paying. That's what we calculated. Guys, is it 5,200? If it is 5,200, the answer should be D. Let's be checking, okay, so that
Yes,
we will
correct.
flow together. Okay. So we are done with let's move on to 53. Now 53 is telling us that what is the total pay for the worker if he is on the row 1 bonus method. Now total pay is the basic salary the person is receiving plus the bonus scheme. So basic salary is the same thing. So we have the basic salary. So basic pay is the 6 hours times the rate we are given, which gave us 900 naira. Then the bonus scheme we are using here, row 1. Row 1. And row 1, the formula is the time that we have saved from the work over the time allowed, which is the standard time, times the time spent or the time taken. All this are multiplied by the rate. Okay. So we are having the time saved was 4 hours over the time allowed was 10 hours times the time spent is 6 hours times the rate, which is 150. Guys, let's compute this and see. Okay, this is 2, 5. So 5, 3, 2, 3, 6. And that it should give me. Guys, what's the answer? So we have 4 on 6 times no, on rather okay, so we have on 10 times 6 times the 150 given should give me 360. So I'm having 360 here. So it's to become the 900 plus the 360. What will be the total? Let me see. My answer here plus 900. It should give me 1260. So the answer should be 1260. The answer should be 1260, which is B. Guys, are we together?
Yes, sir.
Okay, so where we have any question, let's kindly ask. So from here, we have question number 54. I wish someone can help read the questions, but there's no problem. Now, question 54, we
Okay,
have a okay, read.
what is the amount of the overhead under or over absorbed?
No, you have to read this first so that we can
Sorry.
use it to solve it.
Okay. Trilaka provides you with the data below. Actual overhead, that is 5.2 million. Budgeted overhead, 5.50 million. Budgeted machine hours, 17,500. Actual machine hours, 17,040. Question 54. What is the amount of the overhead under or overabsorbed?
Okay, this is also very, very simple. So here we are talking about overhead absorption rates. Overhead absorption rate. So we are going to determine what we call the over and under absorption. Over and under absorption. All right. So if you are given a question like this, the first thing you have to do is to first determine for your overhead absorption rate. Okay, and overhead absorption rate is always given as the budgeted overhead. So budgeted overhead over the budgeted activity level. Budgeted activity level. Now from here, you could see that we are giving budgeted overhead here. And we are giving the budgeted activity level, which is machine hours. So let's use this to determine the overhead absorption rate, or what we call the overhead recovery rate. So the budgeted is 5,250, okay, over the budgeted
300.
machine hours. I'm listening. Budgeted machine hours. So
300.
what do we get? 300, right? Great.
Yeah.
Then we now you having this thing. Let's find our expected overhead. Now, because you find your budgeted overhead, what will become your expected overhead? It is going to become the actual. We are going to multiply this overhead absorption rate by the actual machine hours. Now, actual machine hours is 17,040 times the 300. What do we get? I think it should be 5,112,000, right?
Yeah.
Okay, so this one will become like our standard, whatever we predetermined. Now, what is the actual overhead? So this is the expected overhead or the standard overhead. What's the actual overhead we incurred? Now we incur 5,200 over here. So what will be the difference between this? The difference between will be 88,000. So once you are done with the 88,000, you ask yourself, is it over absorbed or under absorbed? So this is it. We expected that, or we budgeted that we are going to incur 5.1 or 5,112, but we ended up incurring 5,200. If the standard is less than the actual, we call it under absorbed. If the standard is more than the actual, we call it over absorbed. So now this one is going to become 88,000 under absorbed. Are we together? So question number 54 is B. Take note, someone may go and do this. It is so wrong. The actual overhead here and then the budgeted overhead, they will subtract the difference and get 50,000 and tell us that since this one is even more, it is 50,000 over absorbed, which is option, which is D. It will be wrong. Gary, seen the steps? So the answer will not be D, but it is B, 88,000 under absorbed. Can I move on to the next one?
Yes, please.
Okay, let's go to someone. The person reading should continue 55.
Product costing is mainly concerned with A. Finding the total cost incurred to produce a product or a service. B. Analyzing cost behavior. C. Controlling product cost. D. Finding the total of production overhead.
What's the answer? This is very, very simple. What's the answer? All right,
A.
so when we say a product cost is A, okay, that's all. A product cost is finding the total cost incurred to produce a product or a service. That's all. Let's go to number 56, which is process cost. Is it process costing? Yeah. 58. Sorry, 56. Someone should read and then we'll be able to.
KK Prepare Incorporated, which uses process costing, had an input of 13,500 kilograms of material at 20 Ghana cedi per kilogram and labor hours of 12,750 at 25 Ghana cedi per hour. Normal loss is 20% and losses can be sold at a scrap value of 48,750 Ghana cedi. Output was 12,950 kilogram. What is the value of the abnormal gain or loss?
Okay, so let's not bother our heads. Let's solve it and check whether we'll find our answer. All right, so in process costing, we are saying that we make, in the morning we explained process costing, what it is, and then I explained what we call the normal loss and normal gain. Normal loss and normal gain. So let's use this question to tackle it. Mostly when you are given things like this, you just bring out your parameters. So the first thing to do, I wish I can calculate it. It may not, so I have to switch to my board. KK Prepare Incorporated uses the process cost and had an input. So here we are having input quantity as all right. So we have the input quantity. I'm trying to get the figures right. All right. So the input quantity here was given as what? Is it 13,000 kg, right? And then in process costing, there will always be a normal loss. So in the question, we are told that normal loss was estimated to be 20%. So it's always 20% of the input quantity. So 20% of the input is going to become our 13,000 kg times 20%, which is giving us 2,700 kg. This is what we have as normal loss. Once you get your normal loss, what will become our expected output? Our expected output. Expected output is going to become the input here minus the normal loss. So here, which will give us 10,800 kg. 10,800 kg. Then what is the actual output? So the actual output was given in the question as, okay, so we have input here, and then the price of the input is this. Labor is given to us at its price. Normal loss is this. And losses are to be sold at this. The output is 1290. Okay, so output here is given as 12,950 kg. We expected to produce. Yeah, I'm listening.
I think the input is 13,500.
The input is 13,500. Okay.
Yeah, that's what I'm seeing in the question.
Okay. Don't worry, because I'm not seeing the figure. So, okay, so 13,500. All right. So this is what we have. We confirm whether the figures are written are correct. So the actual output is this. Now, we spoke about normal loss, abnormal gain, and then abnormal loss. So normal loss is always given a question. We are expected to produce 10,800 kg, but we actually produced 12,950 kg. So it means that we produced more. Once you produce more, it's favorable. So we call this one as your abnormal gain. So abnormal gain becomes the difference between the two, which is, so abnormal gain here will become 2,150 kg. Abnormal gain. So this is what the question is actually asking us to do. Let me look at it. Says that what is the value of this abnormal gain? So very, very simple. Now, losses can be sold at a scrap value of 48,750. So now we have to determine, once you've determined these parameters, the next thing to do is to The next thing to do is to determine the unit price. The unit price for this the scrap value. The unit price for the scrap value. Or what we can do is to calculate. So let's determine the unit price. To determine the unit price, we are told that the scrap value can be sold for 48,750. 48,750. So this is what we do to determine the scrap value per unit is going to become the total scrap value that we can sell. The figure is what 48,750. And the normal loss here was 2,700. 2,000. So it means that all these 2,700, when we sell, we get 48,750. When you divide this by that, you are going to get 18, is it dollars or what? Ghana cedis. 18 cedis and 56. So something like this. So 18 cedis and 6. I can leave it to decimal place. 18 cedis and 6. That is how each unit can be sold. Okay. Once you are done with it, we have to determine what we call the total process cost. I'm doing it this way so that we'll see the in exams you may not go through these processes. Once you know what you're doing, you're putting down the formulas. Okay, so the total process cost in the question we're giving material. That the material cost here was the input was 13,500 and it goes for 20 Ghana cedis. So when you multiply the sum, you are going to get 270,000 Ghana cedis. We were given labor in the question. Very simple. Labor cost is also as 12,750 hours is multiplying 25, which here when you compute, you are going to get 318,750. Now the sum of these two, we were not given like direct expenses, so the sum of these two will give us 588,750. 588,750. Okay, so once you have this, the next or the last thing or the next thing to do is to calculate the cost per unit of the expected output. So that expected output we have there as 10,000. What is the cost of one unit? So to determine the cost per unit in process costing, we said it's mostly the total input cost minus the scrap value, if any. So scrap value of the normal loss, all on the expected output. All on the expected output. So we've already calculated for the input cost, which is 58850 minus the scrap value, which the question gave it to us 48,750, all over the expected output. We calculated here expected output of 10,800 kg. Now, when you estimate this, you should be able to get 50 cedis per kg, 50 Ghana cedis per kg. Now, because they're telling you to calculate for the value of the abnormal gain. Now, value of abnormal gain. Abnormal gain here. The abnormal gain, we calculated it as 2150 kg. So 2150 kg will be valued at the price of this we've calculated 50, which when we do, we should get 107, confirm 107,500. 107,500. So which will be option what? Let's check. Option. So remember, we don't get abnormal loss, but it's abnormal gain. So the answer is B. Are we together? If you need any clarification for me to go over, I will do. I will do. All right. Are we okay with 56? Are we okay with 56?
Yes, please.
What are you saying?
Yes, please.
Okay, so someone should read the question number 57.
An extra cost incurred as a result of a decision is known as.
So what's the answer? Is it marginal cost, activity cost, incremental cost, or sunk cost? Okay. So the extra cost you incur as a result of a decision, we call it incremental cost.
Please.
Yeah, incremental cost. Sunk cost is what we call past cost. Activity cost is cost per an activity which is undertaken. A marginal cost here is also the additional cost you incur as a result of producing one unit. But the cost you incur as a result of making a decision is called incremental cost. But the cost incurred as a result of producing additional output is called marginal cost. Okay. Now let's solve question number 58. You see, they will give you a lot of table which the calculation is very, very simple. Once you know what you are doing, you can be able to work so fast. All right, read the LMAO Company Limited.
LMAO Company Limited manufactures a single product and has drawn up the following flexible budget for the year. Units produced 700, 800, and 1000. Direct materials for the year for 700 and 140,000. For 800, 150, 160,000. For 1000, 200,000. Direct labor for unit 700, 105,000. For 800, 120,000. And for 1000, 150,000. Production overhead for 700 units, 58,000. For 800 units, 62,000. For 1000 units, 72,000. Other overhead, 700, that is the 700 units, 40,000. For 800 units, 40,000. And for 1000 units, 40,000. Total cost for 700 units is 348,000. Total cost for 800 units is 382,000. Total cost for 1000 units is 462,000. Question 58. What would be the total cost in a budget that is prepared at the 900 units level of activity?
Okay, this is very, very simple. So once you see that we are talking about flexible budget. So flexible budget is prepared based on the previous year's estimate. Okay, so if you are given information like this, what can help us make the prediction? So this is a forecasting technique. So under forecasting, we need to be able to establish a function that should help us estimate or predict what will happen next. And yet the prediction is on 900 units. 900 units. So what do we do? Now, what will be, if you see a question like this where we are giving a unit here, we have the high, we have the high, we have the low unit, and we have the medium unit. Once you have something like this, we said that you can only use the high-low method, high-low method in estimating for this. So the high-low method is for us to find a function that we can use to solve the total cost over here. Okay. So high-low method, what is the function? We are first to get what? The highest output, which is what? 1000 units, and the lowest, which is 700. So what will be, you see, the formula to find for the variable cost per unit, we said it is the highest, the cost of the highest unit, the total cost of the highest unit is 462,000. 462,000 minus the lowest is 343,000 all over the highest unit, which is 1,000 minus 700. So when you do this, what will be the answer? What will be the answer? So I have 462 minus 343. I'm getting 119, if I'm not mistaken. So I'm getting 119,000 over 300. So I have 119,000 on 300. I am getting, but is it the, am I getting the correct thing? So I'm getting 396.67. So I'm getting three is even naira. So 396.67. This is the variable cost. So from here we can determine the fixed cost. So we say total cost is equal to what? The fixed cost plus the variable cost per unit times the quantity. I can pick any of these units. I can pick any of these units to do that. So let me pick the 700. The total cost of the 700 units is 343,000 minus the fixed cost plus the variable cost is 396.67 times the units there is 700. Guys, let's do that and see. Fixed cost is equal to 343,000 minus the sum of this. So let me see. Answer times 700. I am getting 277,666 or 277,666. Guys, are we following 277? Oh, 666.67. When we subtract, what are we getting as the first cost? Guys, what are we getting? Okay, so unless I do my thing, let me try and use this simple approach. Let me use this simple approach. So we are given 100 units. What we have to do is we have to determine the unit for direct material, direct labor, production, what. Okay, so when you want to know the unit for the direct material, here we can pick any of the units here, divide it by this. So I can pick the 700 units. I can pick the 700 units, the direct material here, which is 1400. I can pick, oh, where's my calculator? Okay, so I can pick the 140,000 divided by the 700. I should get 200. Someone may decide to pick the highest one, which is 200,000. 200,000, 1, 2, 3, divided by the 1,000 units, you should get the same 200. So it means that when I divide the cost here over the unit, I should get the variable costs over there to multiply. You know, we said that variable cost per unit remain constant. In the morning when we're doing, we said that variable cost per unit is always constant. So 140,000 divided by 7 is 200. Now 200 here, if I multiply by the 900, I should get what is here. So 200 by the 900 should give me what? 200 by 900. 200 by 900 should give me 180,000. I will put it over here, 180,000 naira. Then I come here to the same thing. I can divide 105,000 over the 700. So 105,000, 105,000 on the 700, I will get 150. Now the 150 times 900, I should get 135,000. So this one is going to be 135,000. Are we getting the concept? Then I can come here to with the production overheads is called a mixed cost, or what we call a semi-variable cost. So semi-variable cost, the variable cost over there changes. So you can't use the same approach for this. And then the overhead here, the other overhead here, you could see it is 40,000 throughout. It is the fixed component of it. So year two is going to be 40,000. But this place, because the variable costs are not the same, we'll use the high-low method. The high-low method. Okay. So that's what we actually solve for it. What will be the first cost over here? I had the first cost as what? The way you are not helping me, I'm struggling. Oh. I have to wait for 3,000. 1, 2, 3 minus 277,666.67. I'm getting 65,333. So the same approach here, 65,333.33. So assuming I have this. Now from this, I can use to estimate the cost over here. Now the cost function is going to be total cost is equal to the first cost, which is 65,333. So let's leave it one decimal place or a whole number. Then plus the variable cost is what? 39667 times the unit we are producing is 900. So let's calculate all of this over there. Let me use my calculator. Guys, hope you are getting the concept.
A little.
I think my my calculation is not adding up here. Sorry. Let's try and then help me so that I can do it very, very quick. You see, the formula we are using for the production overhead. So the total cost over there is going to be this production overhead. So when we come, we say the variable cost per unit 72,000 minus the lowest, which is the 58,000, over the highest 1,000 units minus 700. So here, 72 minus 58 is giving me what? 72 minus 58 is giving me 14,000 divided by 3. So 14,000 divided by
What is
300.
6.7?
What's the answer?
What is 6.6?
6x. Okay. All right. So from here, we can estimate the total first cost function. First cost is equal to your total cost. So let's pick any of the total cost. I'll pick the 72,000 total cost minus variable cost per. So we have the 46.66 times the unit at the 72,000 is 1,000. So what will be the first cost over here? Let's do it very fast.
25,340.
25,340.
40. Yeah.
Okay. So this is the total first cost function. It is 25,340 plus 46.66 K. Now let's put the K. The K there is the 900 units. Let's put a note the total first cost over there. 900. When you solve this one, what will be the total cost?
Oh,
There was the total cost. Unless I use my calculator. So we are having what 25 40 plus 46.66 multiplying, is it 900? 900. So the answer is 67,334. 67,334. 67334. Let's add all these three. The answer here to the nearest whole number because of the round errors. So let's add them and see. The first one is what? One. Okay, let me add.
Yeah, I'm adding it.
180,000
I'm adding it.
plus. Okay, I'm listening. 67,334 plus 40,000.
422,334.
Okay. So here, because of the running decimals and all that, we are not going to get the answer over there, but the answer is equivalent to D, which is
Yes.
421,000. Provided you are using it on your calculator and then you don't run it, you use all the decimal, then you should get D. Guys, are we together? So if you get a question like this, high-low method, production overheads here, they are mixed costs. So we have to use high-low method to segregate the cost over there to get this one, and then the rest is just simple. Add the total and you are good to go. Okay. So let's read question number 59. Someone should read the question number 59.
Do you even know?
You have a question? Okay,
Yeah, so
we are
the
listening.
whole forecasting technique, right? Is it about the high and low method?
Yeah, this one is purposely about high and low method. No, are you asking that the whole forecasting is it about high and low?
Yeah.
No. The whole forecasting is not about high and low. High and low is part, regression is part, and then we have time series analysis. So this is forecasting techniques. We have the time series analysis, the moving average, high-low regression. So that is it. So it's not only about high-low. If time permits today and we are done, I will take you through basic time series, how to calculate moving average and then the trend, if time permits. Okay. So let's go to number 59. Someone should read 59.
Oketeka Nigeria Limited makes a single product and is preparing its material usage. So please, I think, okay, its material usage budget for the next year. Each unit of product requires 2 kg of material and 5,000 units. Products are to be produced next year. Opening inventory of material is budgeted to be 8,000 kilograms, and the company budgets to increase material inventory at the end of the next year by 25%. The material purchase budget for next year is.
Okay, we are done, right?
Yes, sir.
All right, so let me try and talk briefly on budgeting. So budgeting like this, we did something very profound over there. When we say a budget, we are just talking about a financial plan. Okay, so financial plan of an organization that depicts its financial plan of an organization that will show its objectives. And then mostly in budgeting like this, we prepare what we call the functional budget. The functional budget, we dealt with that in our class section. And these functional budgets are mostly 6. So you prepare what we call the sales budget. And then after you prepare the sales budget, the information in the sales budget is to help prepare what we call the production unit. So the production unit budget. These are mostly in units, and this sales budget is mostly in value. When you get your production units or the number of units you need to produce, the next thing is what will become the material you will use. So the material usage budget, which we are going to prepare in this question, the material usage budget. After you know the number of materials you will need, then we prepare what we call the material purchases budget. We prepare what we call the material purchases budget. And then once you are done with the material purchases budget, you prepare what we call the labor cost budget. Labor cost budget. And these are called the functional budget. Functional budget. We have the cash budget as well. Cash budget. I don't know if they'll bring a sample questions in it, but try and then learn about cash budget. Once you have all these things, we consolidate the cash budget and functional budget together, and we get what we call the master budget. So now this one, they are just telling us to prepare a component of it. So they may not tell you to prepare a whole thing. Maybe they can tell you, give you information that prepare the production unit, prepare the material purchases or labor. Just like this question is told us to prepare the material usage budget. And there is a formula, a format you have to follow. So we are told that Oketeta Nigeria Limited makes a single product, okay, and is preparing its material usage budget for the next year. And each of these units require 2 kg of material. So we require 2 kg of material and 5,000 units of products are to be produced next year. Sometimes they can tell you they produce several units or several products. Okay, so if they give it such to you, know. Then the opening inventory of the material is budgeted to be this, and closing inventory is giving us an estimate. So you should prepare the material purchases budget for the next year. Okay, this is what we are going to do. Okay, so the material usage budget. Material usage budget. So in the essence, you are doing it, so you won't even have time to do this thing. I am explaining, so I have to try and put down the format for you. So with this, we are going to have the kg here. And then remember that the product, we don't know the name of the product, so let's put down product. The 5,000 units that we are going to produce, we will require 2 kg each. So that means that what will be the total kg you will need for the 5,000 units? It should be 10,000 kg, right? So once you have this 10,000 kg, we are going to add our closing inventory to it. Now, closing inventory is giving us an estimate. They say what 20% of what? 25% of the, okay, let me see. Opening inventory is budgeted to be 8,000 kg. The company budget to increase the material inventory at the end of year by 25. So what you have, we are going to increase it by 25. So 25, I can do it 1.25 times the 8,000 of the opening. Guys, what will be it? I think it should be 10,000 or so we get a 20,000 as the total. Be confirming the figures for me. Then we will less the opening inventory. The opening inventory or the opening stock was given as 8,000 here. When you less, you will get your material usage. Okay. So material usage should be 12,000 kg. Material that you have to use is 12,000. And the one you have to use, if they give you the price per each material, then you multiply it by the price. So I can get your material purchases, the materials you will purchase. But once they've not given the purchase price, then this will be the material usage. So let's check for the answer there. So the answer, the material purchase budget for the next year should be the D. Guys, do we understand? So the format is that get the unit you have to produce. I'm to produce 10,000. The unit to produce is 5,000 units. I need 2 kg. So it means I'm going to get 10,000. I need 10,000 to produce it in all. By the end, I was left with 10,000 as well. That means in the whole year, I was having 20,000. Or I will need 20,000 to make the production. These 20,000, I have already 8,000 in stock. So I have to take the 8,000, or I have to replenish the 8,000 with it. And then what is the actual materials you will need to make production? That is the 12K. And then the 12K is what you need for production. So you go and buy. Do you understand the concept here?
Yes,
Okay.
sir.
So let's go to question number 60. Question 60.
Bend local government is preparing its cash budget for the year waste for its waste disposal department. Which of the following items would not be included in the cash budget?
Okay, so it means that right now we are budgeting. The question is flowing from budgeting aspect. So it's so simple. In the cash budget, we record only items of cash, items that have cash nature. So items that do not have cash nature, we don't record. So truck operators' wages, we will pay them wages, we record it. Fuel for the collection, we record it. Depreciation is not a cash item, it is a non-cash item. We have estimated that, okay, so once you are using the machine will fall, the value of the machine will reduce. So let's set some money aside that at the end of the machine period, we can replace the machine. So we have depreciation, amortization, we have depreciation, amortization, they are all notional profits. Provision for bad debt, provision for doubtful debt, and all these things, they are not included in cash budget. So the answer is C. Can we read the 61? Are we okay? Oh, guys. Okay. Okay, so let me read 61. But this evening we are not being active crowd. Why? We are not being active. I'm not getting anyone to even read. But no problem. Let me read my question. Okay. So 61. Which of the following would
Please, let me
explain?
read. Let me read.
Okay. Okay.
Which of the following would explain an adverse variable production overhead efficiency variance? I. Poor quality material was difficult to process. II. Employees were of a lower skill level than specified in the standard. III. Unexpected idle time resulting from a series of machine breakdowns. A. II only. B. I and II. C. I and III. D is II and III.
So guys, what's the answer? We know variances from standard costing, basic variance, and computation. All right, so we are told that which one will explain the adverse negative variable production overheads? So this we are talking about indirect expenses. So we are told that one, poor quality material. Once you see material was difficult to process. Employees were of lower skilled level than expected in the standard. So what will bring a negative is that one, employees could be having a lower, because mostly we employ on we don't employ skilled labor, we employ the unskilled labor. So it could be that the unskilled labor do not have the competence to do the work. That's why we are having negative. Or there could be that there was an unexpected idle time resulting from a series of machine breakdown. So you are using machine to work and machine breaks down, but poor quality material was difficult to process. It's not really a way of explaining why we will get a negative variance in the production overheads in production. So the answer is going to be D. Is going to be I and then I and I only. Poor material was difficult to process is not included. All right. So we are still on the variance and standard costing. Let's read the question 62 to 63.
Yes. Okay. Please, can you calm down a little? Okay. Items,
Or can you see the
output.
following?
eh,
No,
Sorry,
no, the following information.
the following information is given for questions 22, 62, and 63. Items. Output is 2,000, standard is 1,000. Quantity of material required per unit of output. Actual is 3 kilogram per unit, and then standard is 4 kg per unit. Price. Actual is 25 USD per kg and standard is 30 USD per kg. 62. The material price variance is A, 10,000 USD adverse, B, 10,000 USD favorable, C, 30,000 USD adverse, D, 30,000 USD favorable.
Okay. So standard costing is very, very simple. So what you have to do is to know how to do your standard costing. So mostly we calculate for material, for direct material, we calculate variances for direct labor and for expenses. So with the expenses, we mostly call it the overheads, the production overheads. And they all follow the same analogy. So let me use this to explain. So when you are, mostly we have the total, we can find the total direct material cost variance. Total direct material cost variance is given as your standard material cost minus your actual material cost. Just bringing the formula out of play. So we have this is the total direct material cost variance. And the material cost variance can be segregated into price variance and usage variance or quantity variance. So this is the first one. The second one, we can have direct material price variance. So the variance, the differences can come from the price or it can come from the quantity. And this one is mostly, to find this one, we call it the standard quantity. Sorry, let me do standard price. Standard price times standard quantity will give you the total standard material cost, and the actual is what? Actual price times actual quantity. This is what we do. So this one too can be in the price. Where the variance is in the price, we are saying that it's going to become the standard price minus your actual price, then against your actual quantity for the price variance. For price variance. Just keep these things in mind. Then the third one is your direct material usage variance. Usage variance, the variance is in the usage. That is the quantity. So you can have the standard quantity minus your actual quantity against your standard price. So remember, where the variance is in price, we are focusing, the brackets, you are focusing on price. Where it is on quantity, you are focusing on quantity.
Yeah.
Okay. The same thing happens for labor. So let me talk about labor briefly. Labor cost. So direct labor variance. This one we have to first we have the total. So the total labor cost variance is always going to become your standard labor cost minus the actual labor cost. And then, you know, for standard, it's going to become your standard. So the price here, there is rate, standard rate times your standard hours. Then here will become minus actual rate times actual hours for the total. But this total can be segregated into direct labor. So the labor rate variance, that means the price variance. Rate variance, you are going to, it means that it is in the rate. So standard rate minus your actual rate times your actual hours, just like this first one. The only thing changing is the P. All right. Then the third one will be the direct labor. The hours, we don't write it labor hours, we write it labor efficiency. So hours, we call here efficiency variance. Because it is on hours, we are calling it as your what? The bracket is going to become your standard hours minus your actual hours times the standard rate. Hope we get it. This is what we know. Then we come to the production, the overheads. So production overhead variance. Overhead variance. Year two is the same, your standard overhead, production overhead, minus your actual production overhead. So the overhead year two, remember, we have your what? Standard, it become your standard rate times your standard hours minus your actual rate times your actual hours. However, remember the rate here. You see, the rate here in the labor is different from the rate here in the overhead, because the rate here is the overhead absorption rate or the overhead recovery rate that you will calculate per what you are given, the budgeted over the activity hours. That is where there's the slight this one distinction comes in here. So the rate here is different from the rate in the labor, because the rate here is the one you will determine, but the hours there will be the same. Okay. So this one too can be further segregated into the rate, to the rate, which is the production overhead. So yeah, and the rate, we call it expenditure, because we calculate, we call it the production overhead expenditure variance. So it's the same thing. It is on the rate. The difference is on the rate. So you count the standard rate minus your actual rate times your actual hours. But this rate is the overhead absorption rate. Bear in mind. Then we come to the production overhead efficiency, because I'm going to talk about the hours, efficiency variance. So it's going to become standard hours, actual hours, then your standard rate, which will be the overhead absorption rate you will calculate. So we have all this, then we can calculate our work. So the work, we were told that we should calculate the price variance, right? So let me even calculate it here. We are told to calculate the price variance, very simple. So you know price variance, the variance is on price. So I write my standard price minus my actual price times my actual quantity. I have everything over there. So actual and standard is giving me. So they said standard, okay. Standard quantity. Standard quantity is what? Sorry, actual quantity is AQ. Actual quantity is, that's the output. Quantity of material required per unit of output is 3. So to get my total output, actual output, I'll multiply the 3 by the 2000, which will give me 6000 kg. Am I correct? Yet if I multiply, I'll get 4000 kg as the standard. Guys, are you following?
Yes, sir.
So yeah, my actual quantity is 6000 kg. Into bracket, standard price is what? 30 minus actual price is here. Actual price is 25 USD. Remember, so I have 6,000 kg times here. 30 minus 25 will give me positive 5. Then I will multiply. 5 is 30. So it give me 30,000. Because it's giving you positive, we call it 30,000 favorable. Then you go and check. 30,000 favorable is option what? D. It's so simple. It's so simple. Where if you subtract the bracket and you get negative, you won't put the negative though, but you will just call it adverse. Okay, let me just clean. Okay. Hope you are together with this. It's very simple. Can we go to 63?
Yes, sir.
All right, so 63 is telling us we should calculate the usage, which is the quantity. So the focus, the bracket is on what? Quantity. So it will become your standard quantity minus your actual quantity over your standard price. Sorry. Your standard price. So this one is very simple. So SP, your standard price is 30. Standard price is $30 into bracket. Standard quantity I've already calculated here. I multiply this and I have 4,000 kg minus actual is 6,000 kg. So here I'm getting 30 is multiplying 4,000 minus 6,000 will give me negative 2,000 kg. But I won't write it negative. I'll rather indicate it as adverse. So 3 times 2 will give me 6. 1, 2, so 4 zeros, 60,000 adverse. So what will be the answer? 60,000 adverse is option D, right? Guys, are we okay? Do we understand? So it applies to labor. When you are giving labor, I've already showed you how to go about the formulas. It's my dashboard. I've showed you how to go about the formulas. So once you are able to identify the formulas rightly, you don't have a problem. You don't have a problem. Okay. So someone should help read the question number 64. Question number 64, yeah. Question 64. Do I have a volunteer?
Zella Limited Services Testing.
Zola Limited has a fixed cost of CAG 2,400, sorry, 2,400,000 per annum. It manufactures a single product, which it sells for CAD 200 per unit. Its contribution margin ratio is 40%. What is the company's break-even point in units?
Okay. This is also very, very simple. I am making the calculation a little longer, not for anything, just because you have to understand when you go, you also try and then solve your own point, your own thing. Okay. So this is talking about short-term decision making. The short-term decision making in costing, we have what you call the CVP analysis, cost volume profit analysis. We have what you call a shutdown decision. Shutdown decision. We have make or buy decision. Then we have what we call the relevant costing. They are all short-term decision making. So this one talks about the cost volume profit analysis where our focus mainly is on contribution. Our focus mainly is on contribution. So this one, what you have to know is Isola Limited had a first cost. So we have our first cost. So that is a Canadian dollar. We have 240K per annum. It manufactures a single. So we have that in the mix product, but this is a single. Manufacturing a single product and sells for. So the selling price per unit, okay, is given as 200 Canadian dollar per unit. The contribution margin ratio is given as, so contribution margin ratio is given as 40%, which is 0.4. These are the information we need, and we are told to calculate for the break-even point. So the simple way to go about it, we are saying that contribution per margin, you see, the formula is that contribution per margin is equal to your selling price. So remember, the selling price is per unit times your contribution per margin ratio. I need to write it on the dashboard there. So what we are saying here is that because the formula is important for us, the contribution margin per unit is your selling price times the contribution per the margin ratio. Contribution per margin ratio. Okay. So now the contribution per margin, we are having what? The selling price is given as 200 Canadian dollar, which is multiplying the ratio given in the question as 0.4. So you are going to get what over here? I think you should be able to get 80,000. Sorry, 80 CAD. That's contribution per margin is 80K. Then to calculate for break-even point in units, break-even point in unit is your what? Your fixed cost or your total fixed cost over your contribution per margin. Contribution per margin. So fixed cost is given as 240K over contribution per margin is 80. When you divide this, what should you get? I think this one should be 3, right? 8, 3, 24. So this should be 1, 2,
30,000.
3. 30,000 or 3,000. So let's check whether
30,000.
30,000. Let's check whether 30,000 is in the this one. Okay, that is D. Then you are good to go. So anytime you are giving contribution per margin ratio, it is equal to your selling price or to find for your contribution per margin ratio. You can do the change of subject, but contribution per unit, it is your selling price times the contribution per margin ratio. Then you get your contribution per unit. You substitute it into the break-even point formula. Break-even point formula. First cost over contribution per unit. Is either contribution per unit, contribution per margin. Then you get your answer. It's very, very simple. Are we together? Okay. All right, so let's read at 65. Let's read 65.
If there is excess capacity, the minimum acceptable price for special order must cover A. Variable costs associated with special order. B. Variable and fixed manufacturing costs associated with the special order. C. Variable and incremental fixed costs associated with the special order. D. Variable and incremental fixed costs associated with the special order, like the contribution margin usually earned for regular units.
Okay, so what's the answer? Can anyone try before we explain the possible answers? All right. So we are saying that if there is an excess capacity means that there is a spare capacity. You are allowed that maybe work. You are supposed to work like 10 hours. You are able to work with 4 hours, 6 hours. You are left with 4 hours. So it means that you have an excess capacity. Then the minimum acceptable price for a special order is a job costing order. It must cover A. The answer should be C. So they say A, the variable and the incremental fixed cost. Variable and incremental fixed cost associated with the special order. But yet they are saying the variable cost associated with the special order. It is correct, but it's not totally correct because even though fixed costs remain constant, if we have an incremental fixed cost, it means that when you undertake another project, the cost that will vary. You see, in the first example like this, we have something here. I think when in the morning when we're doing something like this, let me check. I'm coming. They gave an example where we have 80 and 120, and we were like, okay, this one. Question number 22. A taxi provider charges a minimum of 80 and thereafter charges 12 per kg for a distant travel. And we are saying that this one is called what? A semi-variable cost. Semi-variable cost because it's a mixed cost. It has both an element of fixed and an element of variable. So when it happens that way, I think we are question number 65. Let me see. 65. Okay, so 65, yeah. When it happens that it means we have an element of fixed and an element of variable. So for a special order, we are going to consider this. We will not consider the third because there will be no loss contribution. Okay. Are we clear with this? If we are, you can read the question 67. Hey, sorry, 66 instead.
You are currently employed as a management accountant in a manufacturing company, earning 10 million naira as basic salary and entitled to other emoluments. You are contemplating starting your own business. In considering whether or not to start your own business, with your current salary level would be.
Okay. All right. So this one is very simple. What will be the answer? You are currently employed as a management accountant in a company. You are supposed to earn 10 million naira as your basic salary and entitled to some other emoluments or bonuses. Right now, your decision is whether you are starting your own business or you are going to be employed as the management accountant. So, for you to consider whether I want to start my own business or I want to be employed, your current salary level will be what? Is it a sunk cost? A sunk cost simply means a past cost or a committed cost. Or is it an incremental cost? Remember, we said incremental cost is the cost associated with making a decision. So that cost is mostly avoidable cost. We sometimes call it avoidable cost because if you don't take the decision, you don't incur that cost. Then we have C, irrelevant cost like historical cost, fixed cost. They are costs whether or not you make the decision, you will still incur. So we mostly call it unavoidable or uncontrollable cost. And an opportunity cost is the cost that the benefit you would get in you losing an alternative. Okay, so what would be the answer to question number 66?
Opportunity cost.
Exactly. So the answer is opportunity cost. So now if you start your own benefits, your current salary level of the 10 million naira, you won't get it. So the benefits you will lose in the alternative forgone is called opportunity cost. Let's go to 67.
Which of the following is not a likely problem commonly encountered when companies increase the amount of automation without updating their costing system?
Are you done? Are you done reading?
Okay.
Okay. So 67, we are saying that all of them are a problem. Which of them is not a likely problem? Means all of them are a problem. We are saying that if you are updating the costing system, it can lead to incorrect product cost, which is true. If you are updating the costing system, it can also lead to incorrect selling price. Because costing is about we controlling costs. And then the company may incur losses. Once you don't get your product cost and selling price right, definitely you will incur a loss. So these things are correct. Then they said the D is incorrect new system and incorrect overhead rate. So 67, the answer will be D. Because if you would increase the amount of automation without you updating the system, it will not lead to a new system. It rather bring about maybe a wrong unit cost, selling price, loss may be incurred, or the overhead, because the overhead will be computed from this information. The overhead may also be wrong. So the one which is not a likely problem is the D. Are we together? All right, 68. 68. I think the preceding ones are just normal analysis question. 68.
Which of the following is not a common feature of process costing systems? A. Clearly defined process cost centers. B. Maintenance of accurate records of units and part units produced. C. Maintenance of cost for each process and not transferring to other processes. D. Averaging the total cost of each process over the total production of that process. E. Clearly defined procedures for separating costs if two or more products are produced.
Okay. So all of them, which of the following is not a common feature? All of them are a feature. One is not a feature. So when we are talking about the process costing system, we have clearly defined processes, clearly defined process cost centers. So from one process another to the other to the other. So you could see it over there, which is correct. Maintenance of accurate records of units and parts units produced is also correct. There will be maintenance of cost for each process and not transferring to other processes. This is not true because in process costing, when you finish one process, you transfer everything there to the other process. Where you don't transfer, we call it WIP. You work on it and then you transfer it again. Averaging the total cost of each process over the total production of that process is true, and clearly define procedures for separating costs where two or more products are produced is also true. So the answer here is C. The answer is C. Let's read the 69.
Which of the following affects the balance on a cash budget? A. Credit policies. B. Depreciation. C. Imputed charges. D. Impairment of assets. E. Accrued expense.
Okay, so what's the answer? The cash budget. I just explained that.
Imputed charges.
You have to justify. Guys, let's deliberate because we need to analyze it. Because when you go to the exams, it may not be everything you'll be able to do. Sometimes when you're able to take out the wrong ones, it helps you to be able to make more this comprehensive decision to select the right answer. Which of the following affects the balance of a cash budget? Cash budget is prepared on cash basis. So it means that only one would affect the balance, but the rest are not computed or they should not even be included in the cash budget. I said cash budget, we are recording items of cash nature only. Only. Where we have depreciation, depreciation is a non-cash item. So it will not even be recorded in the cash budget for it to even affect the balance. Imputed charges. Imputed charges are like charges that we have incurred but not yet recorded or recorded. Impairment is also when we have a fall in value in a tangible asset like motor vehicle, we call it depreciation. A fall in value in an intangible asset like patents, copyright, and all that, goodwill, all that, we call it impairment. So this one too, it is not included. They are notional amounts we set aside that should the event happen, we would take it and cater for it. And accrued expenses. Accrued expenses are expenses which have been incurred. It's like the imputed charges. We've incurred it, but we've not made payment for it. So the accrual basis of accounting says that expenses or transactions should be recorded as and when they occur, and not as and when monies are paid for it. That is the accrual basis. And the cash basis is saying that expenses should be recorded as and when we make payments for it, and not as to whether they are incurred or not. So it means that all these ones may not be affected. It's only the change in the credit policy. Credit policies are you go for a loan, and then the loan has been increased, the rate of the loan has been increased or decreased. It's going to affect your cash balance at the end. So that is question 69 for you. The answer should be A. Hope you get the explanations. Okay. Question 70.
Which of the following best describes the difference between budgeted and actual profit? A. Sum of sales variance. B. Sum of cost variances. C. Sum of overhead variances. D. Sum of variable cost variances.
Okay, so what's the answer? Okay, no problem. The answer is E. Sum of all the variances will affect the budgeted and the actual profit. Because during sales variance, we have cost variance. The cost variance are the material cost, labor cost, overheads. They are the cost variance. The overhead variances are the production overhead, the efficiency overheads, and all that. And all of these things will affect the actual profits and the budgeted profits. Do we understand? Okay, let's go to the 71.
A unit of product or service in relation to which costs are ascertained is called A. Cost ascertainment. B. Product cost. C. Cost apportionment. D. Cost unit. E. Cost price.
What's the answer? Very simple.
A.
I'm not hearing the answer clearly. Who is talking?
A.
Okay.
Cost ascertainment.
No, it's not cost ascertainment. A unit of a product or a service in relation to which costs are ascertained is not cost ascertainment.
Cost unit.
In which
Cost unit.
okay.
Cost unit.
Okay. So the answer is
D.
cost units. Yeah, that's the answer. Let's move to 72.
In implementing coding systems, various practical matters need to be considered. Which of the following is not a matter to be considered?
I know this one is not within the syllabus, but it's under the IT systems over there. They will try and bring it. So I'm trying to bring it so that your mind will come to that. When you look at this one, chapter 4, they say illustrate the relevance of use of technology and software in forecasting. So in forecasting, sometimes they try and bring some IT related questions. That's why I brought this. So yeah, the answer will be A, because they are saying that when you are implementing coding system, you are doing coding, like you are using Python or you are doing SQL, there's the structured query language, and you are doing that. Okay, so let me read the question again. In implementing coding system, various practical methods need to be considered. Practical methods. Which of them is not a matter to be considered? So the open notations, whether sometimes when you are dealing with Python for the first time, they will tell you that print. You see, it's coding, they will tell you print hello world. Anything like you do, then you put this. So whether you are putting there the quotation as one or double, it will not even affect it. It will still print the hello world for you. But when you are using block coding, indexing, centralized control, check, digit, verification, it mostly causes that. So the answer here will be A. Some of these things, if you are not getting it, is coding and all that. You're not getting it, you try and then choose some and then you skip to become very, very hurried. Okay. Let's do a question on 70. Wait, where am I? Okay. So question 73. I will delay a little on question 73 so that I explain some things there. The following information was extracted from the records of a manufacturing company. So these are the information. We are having average usage, minimum usage, maximum usage, lead time. These are the information we need. They are telling us that what is the minimum level. And these things are mostly called the inventory control. or the inventory levels, where this morning I was trying to explain something with this, that we can set a lower limit, which is called the minimum level. We can have something like this, which will become the maximum level. We can have the reorder level. And then the quantity we order there is called the reorder quantity. The one which will reduce, minimize holding costs and ordering costs is called the economic order quantity. So these are what we know in the inventory level control. Inventory level control. We are told to calculate the before we do the calculation, let me take a few time to explain to you some of the formulas over there. So when you are calculating the maximum level over there, we said the maximum level is going to become, to set a maximum level, it is your the reorder level plus the reorder quantity minus, here is your average, your minimum usage times your minimum lead time. You have to take note of this, where we have the minimum level. To calculate the minimum level, it is your reorder level minus your average. So the average usage times your average lead time. And that is what we'll be dealing with shortly. Guys, hope we are getting, like, try and get familiarized with some of these things, because the nature of your questions are objective, and objective simply means that some of these calculations will come. Then let me look at it. I drew this thing. So the economic order quantity, I've already explained that. We've even solved the question on it. With the economic order, okay, let me teach you how to calculate for the reorder level. So to find for your reorder level, we are going to consider what we call the maximum usage. So reorder, it's like change of subject and all that. So your maximum usage times your minimum, I said minimum, your maximum lead time. Alternatively, to sometimes you will see what you call the demand per day or per period, depending on what is there. So demand per period times your lead time. So once you have some of this information, you are good to go. Then I will try, and then we have something called the average inventory. Now, average inventory, we can have either the midpoint. Midpoint means that half of the maximum usage, okay, plus your minimum usage. So that would be the average. Some other people too can say that it is your half of the economic order quantity, plus your buffer stock. Buffer stock is a stock you set aside. The buffer stock or the safety stock is the stock you set aside in case there is any emergency, you use it to replace it. That is it. Then we have the economic order quantity, like I wrote the formula 2AD times your ordering cost and your holding cost. These are the inventory control levels. So you have to take note of it. If you can take a screenshot, even it will help. You memorize it and then you are good to go. So from what we have here, it's so simple for me to now calculate. So we are told to find for the minimum level. We are told to find for the minimum level. And I already told you to calculate for the minimum level. It becomes your reorder level, then you would subtract it from the average usage times the average lead time. So average lead time, you have this. But remember, we don't have the reorder level. So reorder level is going to become, like I said, it's going to become your demand per period times the lead time, or your maximum usage times your maximum lead time. Your maximum lead time. So maximum usage is given to us as 96,000 or 9,600. 9,600 kg times the lead time. Now, lead time is, okay, so I am placing an order. It will take between 8 to 10 days for the order to come. It means that the minimum is 8 and the maximum is 10. That's the lead time, the time it will take for it to come. So they said maximum lead time will be 10 days. 10 days. So when I multiply, I'm going to get 96,000 kg. I will set it at 96,000 kg. And this is called the reorder level. Now, the minimum level is going to become the reorder level, which is the 96 kg, minus the average lead time. Now, from here, we are giving average usage. Okay. Average usage is what? So it's average usage times average lead time. So average usage is 6,000 kg times average lead time will become the minimum lead time plus the maximum lead time over 2. So 8 plus 10 over 2 will give me that. So 18 over 2 is what? 9. 9 days. So yeah, I'm going to get 96,000 kg minus, now 6,000 kg times 9 is what? It's 54,000. Now 96 minus 54 is giving us so it give me 42,000. So it means that my minimum usage is 42,000 kg, which is what? D, right? Guys, are we okay? Today we are not talking. No.
Yes.
Okay. So that is it. Then we are good to go. That is it, and we are good to go. Let's someone help us read the question number 74. Okay, so question number 74. We are listening.
Wages determination is a complex area where innumerable factors are involved. Which of the following is not a factor in wages determination? A. General economic climate of industry. B. Government policy. C. Profitability of the firm. D. Extent of employment in the society you belong. C. Availability of workers with appropriate skills.
This one is so simple. So what will be the answer? There will be no explanation. What will be the answer?
Is it
If you are,
A?
you say is it A? They said it's not a factor. I mean, all of them are a factor when you want to determine the wage. So which one is not a factor? This one is very simple. The answer is over there clearly. If you want to determine the wage, the general economic climate of the industry. So it's a factor, government policy, profitability, availability of the workers with appropriate skills. So whether it's a skilled or unskilled labor, we can consider that in setting the wages. But the extent of employment in the society you belong to, it has no bearing with you determine the wages. Employee. Okay. 75.
Which of the following is not a cause of labor efficiency variance?
Okay, we've already spoken about labor efficiency. So the efficiency is talking about the hours there. In the labor, the efficiency is the hours. So which one is not a cause of differences in labor hours? Payment of unplanned overtime or a bonus. Payment of unplanned overtime or a bonus is a factor. Use of incorrect grade of labor. So the incorrect grade of labor can be a factor. A poor workshop organization can be a factor. Incorrect materials. You are talking about labor and you are mentioning materials. So even that one will not even consider it. Unexpectedly favorable conditions can also be a factor. You see, labor, we are talking about labor. The question is mentioned materials, so it's not a factor. Okay. 76. This is contract costing. Read and let's go.
But number 75, for the A,
Okay.
number 75 for the A.
Okay. Okay.
Hello.
75. Yeah, I'm listening to you. Are you want the answer to be A? Or, or I should explain again? Can you come again? If it's a question, let us know.
Yeah, the A.
Okay. We are saying that which
I
of the following
think
is
the
not.
A is
Your network is not stable. Your network is not stable. But what we are saying is that which of the following is not a cause of labor? It is not a cause of labor efficiency variance. It's not. So we are saying payment of unplanned overtime or a bonus. If you don't pay the people their overtime or their bonus, it would discourage them from actually putting out their best in working. If you do not use the correct grading bands, so sometimes, mostly in the differential piece rates, because we want to encourage hardworking employees, we use different gradings to calculate for the pay or the pay for the labor. So if you do not use the correct gradings, that one too, it can discourage them. It can be either favorable or unfavorable. If there is a poor working condition, it may not also encourage the labor force to put up their best. Incorrect materials may not impact on labor efficiency. Is talking about the labor hours, and you are talking about materials, so it does not even come in at all. Unexpectedly favorable conditions, like right now, there is a death of one employee. It would impact on the efficiency, or there are retrenchments, or there is what we call redundancy. It can also impact. So these are unexpected conditions. Please, whoever asked the question, do you get it? So D is not a cost, but A is a cost.
Yeah, I
A
get it.
cost. Okay. Let's go to the 6. Read 76. All right, let me read my question. A contract value of 5 million CFA has an architect valuation of work done of 2,750,000 CFA, out of which 950 CFA has been paid, and the agreed retention percentage is 15%. What is the amount of the current progress payment due? So in contract costing, what we are saying is that mostly the work is over a longer period of time, and so you are unable to complete the work within the period of time. But in accounting which is management accounting or cost accounting, we want to record transaction within the accounting period. And so we mostly compute for what we call the total contract price, the total contract price for the period. So if it is for 5 years, determine the total contract price. Then you determine the percentage of completion. The percentage of completion over there, so that you know that, okay, I need to receive like 5 million, and then I have 20%, or I have to receive 80% of it. And sometimes when the work is valued, there is individual valuer who have to certify that, okay, the work you said you have actually done, it is done indeed. So if it is done indeed, we are going to pay you based on the work done. And that work done is where we use the percentage of completion to calculate. And sometimes there is something called the retention money. Retention. The retention here is, okay, we need to pay you a certain amount. We are going to retain a part of it. When the whole work is done, we'll pay you the rest. So that is where most the contract costing issue comes out from. So from this one, let me try and then spell out the salient point we need. We are told that what is the amount currently, what is the amount of the current progress payment due? All right. So the total value of the contract value, that is the contract price, is, so total contract price is given as 5 million. 5 million. Okay. Then we are told that the architect, so the work certified or work done, which has been valued by the architect, the one you have completed, the value of that work done is the value of work done. Work done. We must say work, either work done or work certified. So we are giving that value as 2,750,000. Out of it, you have also monies received, so amounts received. So the amount received so far is what? Out of this amount we need to pay you, you have already received 950,000. So what is the amount now left to pay? Guys, let's start and give me the is someone working on it?
Yes, please. 6,800.
I'm only hearing 800 though.
608.
1,800.
1,800. Okay. So let's say this is the amount. I'm not hearing the figures you are mentioning, but amount received so far is 950, right? And then let's look at the amount retained. Amount retained. So retention. They said 15% of the work the work done. So what is 15% of the work done? The 275 something something. I'm getting 412,500. Am I correct?
Yes, please.
Okay. So now we are to calculate the work certified. Remember, this is work done. Out of the work done, they are taking out 15% of it. So when we subtract, so work certified, the work certified is going to become this amount minus the retention, the amount they will retain. I think I'm getting 2,337,500. Is that correct?
Yeah. Yes,
Okay.
please.
Now it means that the amount that we need to pay to the contractors is this amount. Out of it, we have only paid. The question is, out of it, we have paid what? 950. So what will now be the answer? Out of it, you have paid 950. So the answer will become the payment due. Payment due.
The
What will be
answer
the
is
answer? We should see it in the possible answer.
C.
The answer is what? In the possible answers is what?
C.
C, right?
Yes.
Oh, okay. So that is very, very simple. What we are saying is that determine the total contract price is there. The work certified is there. Check whether there is retention. If there is any amount retention, calculate, adjust it by the work done, then you can get the work certified. Check whether any amount has been paid so far, deduct that amount that has been paid so far from the work, then you can get the amount which is due. And most often we call it contract assets. The amount due is called contract assets. Okay. Let's go to number 77. Very, very simple. Someone should read the 77. But if you are done with the question, I could have explained some other concepts to you, but all the same, let's solve the question. Okay, so 77. Material consumed is 500,000 RS. That is the Indian currency. Open stock of raw material is 50,000 RMPs. And then closing stock of raw material is 25,000 RMPs. What is the cost of raw material purchased? Cost of raw material purchased. As you calculating for the material usage. When we're doing budgeting, the material usage. Okay. So the same format. Let me manage it over here. So here, material consumed. So we have material consumed as 500. Oh, material consumed is 500 RS. So we have 500 RS consumption. The same thing, you add your closing stock. Your closing stock is 25. You are going to get 525, 1, 2, 3. Then you less your opening stock, which is 50,000, right? So when you left 50,000 from this, you should get 4.
475,000.
Okay, which is B, right?
Yeah.
All right, so let's move on to 78. If selling price is 25,000, so we have SP as 25,000, and profit here is 5,000. What is the profit percentage? So very, very simple. If I subtract the profit from the selling price, I should get my cost price. So cost price is 20,000. And profit percentage is equal to the profit over your cost price times 100%. Then you get your profit percentage. So your profit here is what? 5,000. The cost is 20,000 times 100%. Just do this one. Let's see. What will be the answer?
Is
25%.
Guys,
it
what's the answer?
20? Like, do you add percent to the 100?
No, so 100 is
25%.
percent. So the answer you get is percentage. That's why I've done that.
25.
25%.
Don't add percent. Don't add percent to it.
Then 25.
Okay, so B. That's all. All right, so where are we? Where are we? 70, right? Okay, what is 79 is saying that material control involves, if you are controlling your materials, it involves A, consumption of materials, B, issue of materials, C, purchases of materials, and D, purchase, storage, and issuance of material. So what is the answer? If you want to control your materials, what is the answer? Guys, it's very simple. Let's be cooperative and see how we can go about it. Material control involves, if you are controlling your materials in the organization, does it involve consumption of the materials? If you are consuming, it doesn't mean you are controlling it. They're rather exhausting it. Issuance of materials means that you are using the material, because if you issue the material, you definitely consume it. Purchases of material. Does it, and then D is talking about purchase, your storage, and issuance of the material. So the answer here would be C. Because if you are purchasing the material, that is where the material control comes in. You don't want to buy too much material in stock. So you don't want to buy too much of the material. Once too much materials are in stock, you are locking up capital. So you are trying to minimize how you are buying your material. That is where the stock level all comes in there. We set the maximum, we set the minimum, then the reorder. So if we buy, we make sure we don't buy to exceed a certain limit. So that will be the, where is it? The C, the purchases involve purchases of material. And then 8, material requisition is meant for. Material requisition is meant for A, purchase of material. B, supply of material from stores. C, sales of material, and D, storage of material. So if you are the material requisition, it involves when you supplying materials from the storehouse. When you buy and you are keeping the materials there, when you are supplying it to the different department that may need to use it, is what we call the requisition. So you have to fill the material requisition form that you have come to acquire a material from the warehouse. I use it in this department. Some left, I have returned it, or I transferred to another department. So this one involves the B. Then we come to 81. 81. Labor turnover has an effect which translates into cost. Which one of the following is not an effect of labor turnover? Now, labor turnover, we are talking about the rate at which people are leaving and coming into the organization. So those who leave and they are replaced. So when that thing is coming, we say that all of them becomes an effect, but one of them is not an effect of labor turnover. It doesn't mean that because we have turnover, that's why we are doing that. So labor turnover mostly brings about recruitment costs, because if people are leaving, people need to be replaced. And when they are being replaced, we will have to take them through interviewing process. And then labor costs also, labor costs, you are talking about redundancy costs. Redundancy costs is when we realize that, okay, we no longer need the labor. We no longer need the labor, so we have to lay them off. When you lay them off, it is not redundancy cost. It is not labor turnover cost. When you employ a new person, you have to train the person on the job. The person will have to learn on the job through workshop and all that. So the answer here is C. So the redundancy cost is not associated with labor turnover. Do we understand it?
Yes, please.
Okay. Now let's talk about questions 82. 82 talks about break-even again. The following relates to product X. So we have the selling prices 1,500, direct material 500, direct labor 300, variable overheads 250, and fixed overhead is 1,800. What is the break-even? I already talked about the break-even in units. The formula is what? Your total fixed cost over your variable cost per unit. We are having total fixed cost here. We have variable overhead here. So this one like this, let me try and, even though you know this formula, if you if you go and use it to calculate for your break even, you may find it very challenging. So you have to use the cost computation aspect of it. So we do it this way. We said that calculating full cost using the marginal costing. This is what we do. We have direct material. Direct material is giving us sorry. Okay, direct material is 500. We have direct labor. Labor is giving us what? 300. There is no direct expense, so I add the two and I get my prime cost of 800. This is called prime cost of 800. Remember, once I have this, under the marginal, I'll add the variable overheads. So variable overheads here is 250. Then I'll get what? 1,050. Is it 1,050?
Yes, please.
Now, this one becomes the total variable cost. Now, I have to find for contribution. Contribution is sales minus the variable cost. That's the total variable cost. So sales is given as 1,005. Variable cost is given as 1,050. So I'm getting what? 450, right? 450
Yeah.
over here. Now, then the break-even formula comes in unit. It is your total cost. Total fixed cost over your contribution per unit. So total fixed cost is given as 1,800,000, if I'm not mistaken. 1,800,000. Okay, sure. Over the contribution you've calculated, which is 400. Let's calculate and see. 450. Sorry, it's not 400. So 450. So I have 1,008,123 divided by 450. I'm going to get 4,000. 4,000 is option C.
Yeah.
Hope is very simple. So in exams, if you know what you are doing, you just be calculating so quickly and then you are good to go. All right, so let's look at 83. 83, a cost which is not easily or conveniently traceable to a cost object is known as, it's not easy traceable, so it's known as what? Collective cost is not true. Untraceable cost, we don't have anything like untraceable cost. Objective cost is not true. Inconvenient cost, we don't have anything like that. So it is called what? Indirect cost. Indirect cost is a cost which is not directly traceable to the product. Are we together? Okay, so missed cost. A. Which of the following is another name for missed cost? I've been talking about it. That when we say missed cost, it's also called semi-variable cost. But it has a component of fixed cost and variable cost. Are we okay?
Yes, please.
Mm. Okay, there is a few calculation here too again on the abnormal costing, on the process costing. In a particular process, input was 6,000 liters. 6,000 liters, no problem. Normal loss is, so normal loss. Normal loss is given at 10%. So 10% of the 6,000 is 600. 600 liters. So then the expected output, because of the normal loss, the expected output is what? 600 minus this is 5,400. So 5,400 liters. This is it. And then the actual output. The actual output was given as 5,600 liters. These two is what we have. Calculate the normal gain or loss. So here we are saying that we have budgeted to produce 5,400, but we produce 5,600. So it means that we have gained what? 200. And this gain is called abnormal
Yeah.
gain. So which is 600 is for B, right? So we are done. Very, very simple. Another calculation. Okay, so standard cost again is here. The standard price for material B. Standard price material, so it's material price variance. Standard price for material B is this per kg. And then 2,500 kg was purchased for 11,118,900, but only 19,800 kg was used. What is the material price variance? Material price variance. Very, very simple. So I've already said that material price variance, the variance is in the price. So SP minus actual price AP times your AQ, the actual quantity. Okay. So from here, we have to determine all these things. So actual quantity here, okay, is very simple. Let me just write it straight. Actual quantity, we are saying about only 19,800 was used. So that it was the actual quantity, and this is the budgeted or the standard quantity. So 19,800 into bracket, the standard was given as 5.5 minus the actual. Remember, we are told that the standard price for B is this per kg. 2,500 kg was purchased for this amount. Purchased for this amount, but only 19 have been used. So it means that it's to determine the actual price is going to become 118,900 over the 2,500. What will be the answer? 118,900 divided by 20,500 is 5.8. So if I subtract, you get a negative answer. If I subtract this, it's going to become 0.3, right? So because it's a negative answer, I put the adverse. Then I multiply by 19,800. So 0.3 times 19,800, I should get 5940. Let's check whether it's there. 59. Oh, okay. Um, I think I'm coming. 9. 0.3 times 2,500. Yeah. Let me explain. All right. So we are told that from the question, we said that the standard price. So they gave us standard price. 20 kg was purchased for this. So remember, we're even using 2,500 was purchased for this, but only 19,800 were used. So even though we bought 20, the actual quantity we bought was 2,500. But we used 19,800, means that there was an inventory left. So because they didn't ask us questions on inventory, we'll ignore that. We bought 2,500. That's the actual quantity we bought. So actual quantity is 2,500. When you multiply 2,500 by 0.3 adverse, you are going to get 6150 adverse, which is E. Are we clear? Guys, are we clear?
Please come again on that. Please come again on that.
Okay. So we are saying that they say calculate for the material price variance. The formula, we are okay with it. From the question, we're given our standard price. So standard price was 5.5. To determine actual price per unit, remember they said that 20,500 kg was purchased for $118,900 or $118,900. So to determine the actual price is going to become the 118,900 divided by the 20,500 we bought. We have 5.8. So this one becomes our 5.5 minus 5.8. Then the actual quantity. So what was the actual quantity that was bought? They bought 20,000. 200 inventory. So if the question further asks us in the inventory, we can find a difference to have been the closing inventory. But what is the actual quantity they bought? They didn't buy 19,800. They rather bought what? 2,500. That's why we are multiplying the 2,500. When you subtract 5.5 minus 5.8, you get negative 0.3. When you multiply, you're going to get 6150, negative 6150. Because it's negative, you call it adverse. So the answer is D. Are we together?
Yes.
Yes, please.
Okay. Number 87. A company makes a single product of W with a sales price of 250 naira. Sales price is 250 naira. And a total cost is given as 210. Variable cost is given as 180. The given first is 6,300. What is the break-even point in units of sales? Break-even point in units of sales is very, very simple. Break point is given as this. The formula is simple. Break-even point is given as total fixed cost over the contribution per margin. So is that from the parameters here, all we need to calculate is your contribution. And contribution is what? Contribution minus variable cost given as 250, variable cost is 180. What? Is it 140? 130?
70.
70.
No, 70.
Okay, 70. So now we can find the break-even point. Break-even point becomes 300,000 70. What will be the answer? Hey, oh yeah, what will be the answer? Let me calculate. 6,300,000 divided by 70. Okay, this one is giving me 90,000. I'm coming. 90,000, which is option C, right?
Yeah.
So it's very, very simple. So when you have the question, just write the parameters and check what they are asking you. Write the formula down. Check whether the formula you have over there, all the parameters are there. The missing parameter in the formula, search for it, substitute it, and you are good to go. All right. 88. We did what? 87. Okay, 88. As a result of rapidly changing conditions, many organizations review and modify their budget every quarter or half yearly. What is this type of budget called? What is this type of budget called? A, master budget. I explained that master budget contains your cash budget and your functional budget. So in the first place, cash budget and functional budget will not become, they are not subject to yearly review. Zero-based budget. Zero-based budget is budget which is prepared from scratch. And mostly when they prepare it, it's not subject to review unless it is completed. Activity-based budget is also not. So the answer is E, which is continuous budget. Continuous budget is sometimes reviewed every quarter, every 4 months, or half a year, every 6 months. So the answer is the continuous budget. All right. Inventory valuation. I would have to use this one to talk about the inventory valuation. Inventory valuation. I wish you can take a screenshot of the question, this question, because you give me, I'm going to the dashboard and you give me the figures. Have you taken a screenshot so that you can give me the figures? Okay. So I'm reading the question, we can go and solve. The following are extracts from the books of AV Limited for the month of January. So we have the date, the receipts, the issues. Okay, we have all these things over there. We are told that 89, AV Limited uses the FIFO method, that the FIFO inventory method, calculate the value of the 2,000 units issued on 22nd December, 22nd January. So 22nd, okay, 22nd January, this one, what will be the value of inventory? So you have to use the FIFO method to determine the value of inventory. During that, we said we have to prepare what we call the stores ledger. So stores ledger using the FIFO method. This is how it goes. So I will use this same example to explain all the four methods, the FIFO, LIFO, weighted average and simple average. All right. Soon it will be 10 and soon too it will be done. No problem. So yeah, I will try and divide. Okay. I will try and divide the board into 3 different categories where I have my dates, I have my receipts, I have my issues, and I have my balance. That's how the typical stores ledger looks like. Within, I will have extra 3 columns. These extra 3 columns we have the quantity over here. We have the unit price and we have the total amount. Quantity, price, amount. Quantity, price, amount. So the first one, the date, have you taken screenshot of the question? Because going back and forth will be challenging for me. Okay. So when you check, the first one is what? A receipt. So in the first day, they did a receipt and an issue. And then we have the 4 methods of inventory valuation. So you said these 4 methods are the FIFO. First in, first out, LIFO, first in, last out. Then we have the weighted average and we have the simple average. So here, FIFO means that the inventory that will come in first must be sold first. First come, first serve. So inventory that will come into the organization first must be sold first. But the LIFO is saying that the inventory that will come in last must be sold first. Do you understand? Then we have the weighted average. The inventory's price that must be sold we have to consider the weight because they will all come in different prices. We consider the weight of the inventory, then we can now issue it. Then the simple average, you are looking at the averages of the 2 price, then we can sell it. So this is what we are going to do. And in first, is it 3rd or 1st? On 3rd January, we had a receipt of 2,000. 3rd January, 3rd January, we had a receipt of 2,000. The price was what, 14, right?
Yeah.
When we multiply the 2,000 by 14, what do we get? 28,000.
Yes, yes.
Okay. So I can come straight and write my balance here. 2014, and then give me 28,000. But there was an issue. So the issue here, we issued 500. It means that when we receive the inventory in our store, inventory control is where this thing comes in. We have issued some to the production or the department to use. So how, if we issue to the department, what price are we going to issue? FIFO is saying that issue it at the price at which it came. So we have a balance of 2 receipts there. We can issue all 1,000 from the 2,000 at the same price, which is 14. So what will be it? 1,005 times 14 is what? Guys, what is it? Try and help me so we can become
21,000.
very fast.
21,000.
21,000. Okay. Okay. So 21,000, it means that the balance here, let me write it this way so that it doesn't confuse us. After I issued the 1,005 from the 2,000, I'm left with a balance of 500 at the same price. So 14 times 5 is what?
70.
Okay, so giving me 7,000. Then we are done. So nicely close it. You are done. So that doesn't confuse you. Now, the second period, which is on 8th January, we had only a receipt of 3,000. A receipt of 3,000 units at 13.5. 3,000 at 13.5. So receipt 3,000, 13.5. When you multiply, what do you get?
40,500.
Okay, so 4,500. Okay, there was no issue. So I write the balance first, 7,000. Then I have another issue of 3,000 at 13.5, giving me 4,500. I'm done. I close. There's nothing that happened. On the 12th, we have an issue of 2,500. So we issued. So I come to the issue part 2,500. But this issue, we said the FIFO is telling us that first come, first serve. So out of the 2,500, the first 500 can be sold from this one at a price of the 14, giving me the 7,000. Then the remaining 2,000 can be from the second one. So the remaining 2,000 can be from the second, at which price? The price prevailing there is 13.5. So 2,000 times 13.5 will give you what? 2,000 times 13.5. I am getting 27,000. Okay, so now because this one is gone and this one I'm only left with 1,000, right? 1,000 at 13.5, giving me 135,000. 13,500. Okay. There was no receipt, so I am done. I will close the chapter. Then I come to on the 20th. On the 20th January, I only had a receipt of 2,500. A receipt of 2,500 at 14.2. So what will be the answer? Okay, so I have 2,500. 35,500. Okay. On the 20th, there was no receipt. Sorry, there was no issue. So now the balance is still 1,000 at 13.5, giving me 13,500. Then the one I just calculated, now 2,500 came in at 14.2. 14.2, giving us 35,500. I'm done. I close it nicely. Then I come to on the 22nd, where our question really rests. 22nd, what happened? Let me see. 22nd is saying that there was an issue of 2,000 units. An issue of 2,000 units. So there was no receipt, rather an issue of 2,000 units. It means that the first 1,000 can be issued. So 2,000, first 1,000 at 13.5, giving me 13,500. Then the remaining 1,000, we issue 2,000. So the remaining 1,000 can be issued from this one. This is already gone. So it means that I can issue 1,000 at the price over the 14.2, giving me 14,200, right?
Yeah.
So the balance now left is 1,005 because I've issued 1,000 from it at 14.2. 1,005 at 14.2 will give us what?
$21,300.
21,300. I wish not to continue because so now the total of this becomes 27,700. That's what this. They're asking us what is the total value of the issue over there on the 22nd. And so because of the nature of our question, I can end there. I can continue to the last date, but I'm not sure they ask further questions. So calculate the value of the 2000 issue on this. The value is A, 27,700, right?
Yes.
All right, so if it was with LIFO provided when we're doing the issue year, we said we are issuing, okay, we are issuing 2,500. I will start with what is here, the last one that came. I will start issuing from here. So it means that 2,000 would have been issued from the 3,000 at this price. And then if I come to the subsequent is an issue, I will start issuing it from the most recent. That is the LIFO. And then the simple average. The simple average, you are not consolidating anything. So here, what you have to do is that provide the issue year. Here you get 2,000 up. If there is an issue, we will only consider the price variation. So provided we've added two prices here. So simple average, I'm going to do 14 plus 13.5 over 2. Then the amount I'll get there, that is at the price which I will issue. So provided I was issuing the 2,500, the price there will become the average of these two. That is the simple average. If it is weighted average, it means that if I'm to issue the 2,500, at which price am I going to issue that? So I've already added the sum of 5,500 plus 3,500. And then I'll come and add the total amount here. So say this one going to give me 7,500. So the weight is going to be 7,500 by the 3,500. The amount is at the price which I will issue. That is the weighted average. Do we understand? Okay. Okay. So that's question 90. Question 90. Following data were extracted from the records of STU Limited. Direct material cost is 800. Direct labor is given. Expenses, production overhead is given. Non-production overhead is also given. Calculate the full cost of sales. Okay. Try and use this place to calculate the full cost and lesson. So calculation of full cost of sales. So very, very simple. We have our direct material cost, 800 Ghana cedis. Direct labor is given to us, 700. We have direct expenses. When I add all these direct aspects of them, I'm going to get a total core prime cost. So the prime cost is what? 800 and 800, 400 is 1,002 plus 7 is 1,009. Okay, that's the prime. Then I add my production overhead. So production overhead. They said production overhead is 600 per direct labor. So production overhead is what 600, the rate is 600 cedis times direct labor is 2 hours. Direct labor hours is 2 hours. So 600 on 2 hours is giving me 1,002, right? Okay. Then I add also my non-production overhead. So they're telling me that non-production is 50%. Is 50%, 0.5 on the prime cost. Already I calculated prime cost of 1,009. So 1,009 divided by 2 will give me what? $950 or
Divided by 950.
but 50% is 50% is just 2 or so what's the total? 1,009 plus 1,002 then 950. What will be the total?
$4,050.
That is B, right?
Yeah.
So we are done. Very simple. Okay. 90. Which of the following is not a characteristic of the LIFO material pricing method? It's not a characteristic of the LIFO material pricing method. It results in many badges being only partly charged to production where a subsequent batch is received. And that is true. All of them is true, but only one is false. Because LIFO, we are looking at the one that recently came. That's how we want to price it. So recent results in many badges being only to production where a subsequent batch is received. So, like the I was explaining with, if I'm
Right.
using LIFO and I issue all the 2,500 from this one, there is a balance of 500 that would have been left. And then I've received a new one and I'm issuing. So I will issue the most recent, the 2,500, while that 500 is still there. So that's the fee of LIFO. You realize that you are only issuing part of it and the rest is there. It is an actual cost system, and that's what most costing system they do. Is true. It's acceptable by the tax authority. The tax authority does this. Why? Because when you do that, there is a profit component that you are not capturing. At the end, you are going to lock up a lot of capital there. So the tax component mostly prefer the full and then the weighted average. Even the simple average and then the LIFO do not make business sense. So people, organization do not mostly consider. So I did this answer. Administratively clumsy. You could see what we are doing. You can be recording so many. Imagine a lot of them. It becomes very, very comparing that and makes cost comparison between jobs very, very difficult. So the answer is C. 92. A document which includes the detailed cost center and cost units is called A. Tender. B. Cost sheet. C. Work or B. Quantities and E. Goods requisition note. So the answer here is B. When you are determining the units, use the job analysis sheet, the job costing analysis sheet. That's the title of it, analysis sheet. Then we start the computation. So like I was doing here, this is called job costing analysis sheet. Job costing analysis sheet. Okay. Okay. All right. So 93, when actual is less than the absorb actual. So when we're doing that absorption, and then the budgeted, so the absorb, I'll write is budgeted overhead. So if actual overhead is, let's say I have 400, 500, I have 400. I budgeted for 500, actual is 400. That means I did over budgeted, so over absorbed. And we call, if it is this way, the absorb is more than the actual, we call it over absorb. If the absorb is less, in the case of 300, less than the actual, we call it under absorb. So this question is saying what? When the actual overhead is absorbed, there is what? An over absorption. If the actual, so let me write it this way. If, let me put 700. If the actual is less, in this case, we call it over absorbed. Hope we are good together.
Yes, please.
Okay. Which of the following is not an inventory valuation method? Is so simple. FIFO, this one is LIFO, weighted average. FIFO, you know. Periodic average is also part. We have simple average, but economic other quantity is not inventory valuation. It's rather inventory control. Inventory control levels. All right, 95. Gradually, we are coming there. We are coming to an end of it. 95. What is the break-even point where the sales figure is? This place is very, very nice. Sales figure. Oh, where the sales figure is 15 million. And the margin of safety is 0.3 or 30%. They say find what break even point in sales. Break even point in sales. Very, very simple. So we have to find the relationship between the margin of safety and the break even point. The margin and the break even point. But I believe in your various what do we call it? In your various tuition center, you did the CVP analysis, right? Okay, there's no problem. So let me estimate this. So anytime you are doing that, we have to understand the relationship that exists between the ratio and then the margin of C. So yeah, saying that always note that break even point or break even ratio. Let me write or break even point ratio plus the margin of safety ratio should always be equal to 1 or 100%. Should be equal to 1 or 100%. And here we are told that so this is how I'll write the formula. So I can write that the break even ratio is equal to 1 minus the margin of safety, ratio. Margin of safety ratio. So we have 1 minus the margin of safety ratio is what we are given as 0.3. So that means the break-even ratio is 0.7. Once you have the break-even ratio as 0.7, now through the break-even in sales or the break-even value. So break-even point in sales is equal to the actual sales times the break-even ratio. the break-even ratio. So actually, as 15 million times the break-even ratio is 0.7. When you multiply, what are you going to get? Guys, let's multiply and see whether the answer is there.
You said 15.
15 million, or is the question 15 million? Yeah, 15 million. 50 million times 0.7.
1050000.
So what is the answer over there? 10500 is D. So all we are when you are given a question like this, understand the relationship that break-even point in sales or break-even point plus margin of safety, break-even ratio plus margin of safety ratio is equal to 100% or is equal to 1. So to find for break-even ratio, it is just 1 is the margin of safety. And that break-even, if you have the break-even and multiply by the sales amount, you get your break-even point in sales. That is when you are not giving contribution and fixed costs. Contribution and fixed costs. This is another method of estimating it. And questions, you see it. This is how the ICAG questions mostly looks like. You see it a lot, and then you can be able to make your analysis. All right, let's go to number 9. The rest, there is no calculation, I guess. There is no calculation here. 96. Which of the following may be a limiting factor in production? So when you are producing, which one of it will be a limiting factor? They said A, labor rates. Labor rates cannot be a limiting factor. Machine maintenance schedule. Machine maintenance schedule, materials, technology change, warehouse location. So these things may not be that. But B, machine maintenance schedule. So maybe you may schedule for machine maintenance and the machine may not be working. So if the machine is not working, it means that production is going to be idle. Once production is idle, we call it a limiting factor. This one is so simple because it's double entry, 97. Which of the following journal entries is correct for the issuance of direct material to production? So if you issue material to production, if you issue materials to production, what will become the two accounts that would be here? You issue materials to production. The material is not fully worked on. So it means that that material at the production will become an inventory, which is called WIP, work in progress. So if I issue it, we are going to, so accounting is a debit the giver and credit the receiver. So which is given, material is given. So I'm going to debit the material account. Sorry. So who is giving, who is receiving? I am issuing materials from store. So material is leaving store. Once material leaves, you credit what is leaving. When you're receiving something, you debit what you are receiving. So now you debit WIP and credit materials. By here, account payables are creditors. Here we are not selling to, we're not going to buy anything from anywhere. It's within the production department and we are just issuing it from the store to the production department. So accounts receivables, accounts payables, all will not come in. So meaning that from all this one, it's not even part, then our focus should be here. Which one is giving, which one is receiving? Material is giving, so credit the giver. Which one is receiving? Production is receiving as what? WIP. Then you debit the production. So the answer is B. Are we together?
Yes, please.
Okay. 98. We are getting there. The reorder quantity. Okay, so we have reorder quantity is 2,000. And then the annual demand. So annual demand is 20,000. What does it mean? It means that in a year we will demand for 20,000. But if we are issuing the inventories in the store, we will issue it at 2,000 each. So each one batch comes as 2,000. Good. So they're asking how many times are we going to deliver per year? So it means that it's going to become your annual demand over your reorder quantity. Sometimes we call it the economic order quantity. So 20,000 over 2,000 should be 10, right? And 10
Yeah.
is C. So that is 98 for us. 99, activities such as customer service and distribution, material handling, and setups are part of standard A, standard costing, B, marginal costing, C, contract costing, D, activity-based costing, and E, job costing. So one, standard costing does not even come, standard cost does not come in. Contract cost, you'll be seeing work certified and blah, blah, blah. It's also not contract. So we have marginal costing and activity cost, and these ones are costing techniques. Now, marginal costing is done based on incremental. So where we have activities, what should come in your mind is activity-based costing. Activities. Then we have what we call the last one is 100. One of the methods of separating fixed costs from semi-variable costs. So fixed costs from semi-variable, which is called the mixed cost, or sometimes we call it the production overheads. When you want to segregate this cost, the appropriate method is what we call the high-low method. And we could see that in our question like this, we had some of it use the high-low method to separate it. High-low, it is not low-high, high-low. So this is not, but we don't have variable method, we don't have constant method, semi-variable method. It's only high-low method. And that's bring us to the end of our session. The end of our session. I'm trying to save it and let me pause the recording for now. So if you have any question, can draw my attention to it. Okay, so I think there is maximum coverage in everything that we are supposed to do over here. That's the cost, scope of management accounting, cost of accounting for cost elements, cost techniques and methods and pricing, forecasting techniques, budgeting process in the public sector and standard costing. All right, so what I've not talked about intensively in our computation is the time series analysis. But I've already solved, we've solved the question and then we treated that in class. So I would urge that in your revisions, try and then be focusing on the time series analysis as well. Then process costing, contract costing. Make sure you focus on it and be reading about this. They'll also bring it. They'll definitely bring it. You learn about the PPP. The PPP is the public-private partnership. PPP, private-public partnership, where the government and then the privates come together to have a common operation. So sometimes they have some type over there that is built to operate. Sometimes they can build a particular project and then they give to the private sector to operate, like what the ECG currently have done to the PDS, the power distribution. So that's their money, then they transfer it back to the government. There are some shared amenities and all those things. So you read around that. Be reading about the Ghana Integrated Financial Management System, which is the GIFMIS. About it, the materials are already shared with us. You will also read about the functions of the president, the minister of finance, accountant general. These to read around them. Know the budgeting process. Just know the budgeting process. They can formulate. My focus on setting the question for you was on the calculation aspect of it. That was my focus. If you have the slides and you are able to read enough intensively for it, you'll be able to also go about the calculation. Know the difference between incremental, zero-based, priority, resource restricted, and all this. Read around that, and then I'm sure you should be fine. Okay? So in the absence of any further question, we would end the section. All the best in your examination. All the best in your examination. I think you have about a week, and this week can make a lot of difference for you. If you've not started revision already, it's a good opportunity for you to start revision. Just do your best at the studies, be consistent, and be very vigilant. Once you're reading a particular question, it's taking your time, try and skip it to go to next, because you need 50 plus 1 to make a pass. And you are looking at pass. Even though some of us are looking at the extension, please aim at looking at a pass so that you can move to the next level. I wish you all the best once again. It will be a bye for now.
Okay.